Hey guys, in recent videos we spoke of crypto market cap that was just sub 400 billion, trading down into the mid and even low 200s as a forecast. We also spoke of Bitcoin to fall through $7,500 and that the market is in a lower lows and lower highs cycle of Dow theory. In other words, bear market for cryptos. We spoke of other coins like Monero and also Ethereum to make substantial new lows in these clips as well as part of the movement downside. These are the topics we've been talking about, and this is where we're at after today. So Bitcoin, let's start with Bitcoin over here. It hadn't made this target, began what was called a weak rally, had a mini structure of HVF, but it was all part of a rising wedge that we suspected would collapse. It actually came a little earlier than I thought. I thought there was a chance you might rally out the top and even make the small mini target before eventually falling. These are very small structure setups that are grindingly working up in a very much a counter trend manner compared to the predominant impulsive moves that are the down leads. This was a rising wedge. It eventually spun on a top there before pushing through it, which also included coinciding with spoiling the mini funnel that only ended up making second interim, which shows once again the weakness, which is why we weren't getting excited and chasing in with FOMO. I did a premium clip, no FOMO, for my premium guys on the microstructure. The temptation is to want to get in and to grab, but the overall and overarching trend being the bear trend, as in this clip and discussed there, is the predominant. So the bigger time frames dominate. And so we got failure of that little structure. Return move to the grind line. And note, we talk about grind lines. In fact, a wedge is a formation of two grind lines. You'll learn the value of grind lines in HVF theory if you come for our 29th of March free webinar. Go to themarketsniper.com, click get started, check that it's for you by a short tick box questionnaire, and come and join us and expect a good offer to become part of the premium community at the end of that. Return move to that grind line. What does it do? Spills away, spills back down. What do we now have? We have an unmade target for now, and we have a very flat bottom where this could be a relative low one, that's a high one, and a deep dip down, but not a breaking dip. What's probably likely is a secondary rally that might just run through this failed setup funnel area before creating a third and final low, which would be part and parcel of a continuation pattern to the downside. I'm guessing a target which I've taken from the geometry there, and that target right there would take you into the lower 7,000s. Remember, we still have a 7,500 pattern awaiting to be made as part of this. By the way, Bitcoin was the good news. We are short, so we're 100% tether, but short with our tether collateral on Ethereum, and it's doing great. You need an account like Bitfinex or an other that allows you the opportunity to short. Here again, our Ethereum call is calling for the 400s right down here. We expect it to go down into this funnel, but what was a big call some time ago, way up here at 872, which would have represented essentially a 50% collapse in Ethereum, doesn't look so big. This was a really neat little inverted. We took shorts at the 685, 686's level here, ran them down to there, and then on this rally on a shorter time frame got back short on the rising wedge. Very similar structure. What you're seeing is a lot of commonality in the pattern structure across a variety of coins. What this tells you is this is a crypto weakness market. It is not specific to coins, although certain coins have a higher beta. Bitcoin has the lowest beta. Ethereum is the more overextended and is relatively underperforming even further, which is why I selected it for the short. It has made a new low. Note again the rising wedge. It didn't have the same positive upside HV structure, didn't get as far in the rising wedge top, back down, breaks it, grind line just under it, attempts the return move, knocks itself out, totally all punched out, all George Foreman here, and Ali comes and spanks it to the floor. Down, down, down she goes. Tired and exhausted. Key cluster of many levels of significance. Learn about key levels of significance with us. So that's why we had the reaction here, just running that final key level of significance and the cluster of two, confluence of levels. What do? You get the weak grinding rally. It's just an opportunity to get shorter again, higher up for later. So you take off over here and you can not be in the trade and get short higher up. I'm going to do a free view clip on shorting after I've served my premium guys on that same point with this particular trade idea. So watch out for that in a couple of days, maybe. So that's the news. That's Ethereum. Since then, easy Japanese, 45 minutes each one, just giving you more money. Doesn't mean it's going to be like that the whole way down to 400 though. So let's take it back up to the higher time frames. It just confirms that you're on the right side of the impulsive moves, aka you're picking up fiat dollar profits at the expense of crypto. And you might remember a long time ago I actually said never do this. There's a conflict in what I'm just saying. Because crypto has been a highly expansive market, I suggested that new people just never do what I'm now talking about doing. What's happened? The market dynamic has changed. We've gone from a very clear expansive bull to a very clear contracting market. And for someone who is advanced or can understand that, I have been able to make the flip and actually am shorting cryptos to fiat. I used to say only short between the cryptos. That expansive stage is gone. If you don't understand why, watch this clip here about BTC to short 7.5 and Dow theory. In other words, we are in a bear market. We are in a bear market. This allows shorting, and I've chosen a weaker coin than Bitcoin, which is also looking weak relative to Bitcoin. Go look at your Ethereum BTC chart as well. Let's see if I've got a quick flyby for you. I've done it before, but these charts change all the time and reset. Let's have a quick look for you. So the Ethereum BTC had a flat bottom on it, but otherwise was very bearish, and we looked for that flat bottom level to be taken out, and this is what you've got. Look at that sell-off. Look at that sell-off and the relative weakness on it. This was what I was referring to, this flat bottom. And we have got a very ugly, and I've done this in previous clips. Go look at the why Ethereum to fall against both Bitcoin and other cryptos. This is very capitulative and not helpful at all. There was that flat base that we were looking forward to see run, and it spilled through that. This was all part of a left shoulder head, and you had a very high right shoulder there, or you've got a very weak right shoulder here. We take the funnel as the neckline. So you've got already a huge piece of geometry that needs making to the downside. This is a arithmetic, my apologies, a logarithmic, a log scale. Let's see if it'll give me a line this time. It's a log scale, so that's why this chart looks a little bit lopsided. We take it to the HVF funnel. It's still not drawing the line. I don't know why it's teasing me like this. Let's try one more time to see if I can draw a line for you. There you go. So this is geometry to the downside, and it is big against Bitcoin, which means it will probably be big against fiat as well. This is not a good time for Ethereum. For those that are holding Ethereum, I really, truly worry for you, and it's going to be one of my favorite shorts, and I still think there's more to come. That is the Ethereum Bitcoin target after running quite close to 12.5. In percentage terms, it's looking like the lower, below 6% to Bitcoin. That's a 50% to Bitcoin, which is bleeding out against fiat. Hence my Ethereum USD short. This is why we do it. If you want to understand how you could and should actually be making US dollar profits right now in crypto, instead of it being a tale of woe. The days and moments of being long only hero, and that's the only market conditions under which you make money, do not need to be that way. But if you don't invest in methodology and you aren't part of a community and you're not understanding, learning and growing and applying a methodology, you aren't going to be in a position to exploit this. That's my take. Anyway, go to themarketsniper.com and pop over for the 29th live webinar. We'll give you the 7 key trader mistakes and the 3 gifts of trading, plus an offer there at the end to come on board and to learn our method. That's it from me. This is an investment. It's not for everybody. And it's an investment that you should seek to get a multiple on in lieu of any offer that you take up. If you're not prepared to extract, learn and grow, you will not get that return, and don't attend. Or come and just listen to the free webinar, but do not take an offer up. This is not for everybody. You can make money in falling markets. Okay, I will do a follow-up clip at a later point after I've served premium on shorting with some of what we've done recently on Ethereum. Speak to you all soon. Bye-bye.